Hey guys, Mike here. So, oh boy, another one bites the dust. If you hadn't heard yet, we're going to go into that. I got a whole bunch of stuff to cover in this video. So I'm going to get right into it and say, oh my goodness, did you ever think you see Facebook below $100? Down 25% today. Oh my goodness. I mean, that was just crazy. And then here comes its brother, Amazon. You look at this and you think, well, okay, cool. You know, BDPS, missed revenues by slightly, just a little bit. It ain't bad, right? Oh, wait a minute. Fourth quarter, ooh, not good. Sales 140 to 148 billion, and they're going to go ahead and say the estimate is 155, and bam, that puppy goes down $20, down 19% last time I looked. I mean, I got to give it a car wreck. Oh my goodness, yep, there it is, and there goes Facebook. See Facebook flying underneath right there on fire? I mean, just a hot mess. Oh my goodness. But, you know, it's not all bad. I mean, Apple, you would think this would be, you know, not too bad, of course, but, you know, they always be. They got 90% win rate or something. iPhone sales come in a little bit light. China slowed for them. Last time I looked, they're down between 0.5% and 1.5%. Nothing big, nothing major. That's Apple for you. But you know what? You're still getting a car wreck because China's going to slow down. Your iPhone sales, you cut the price. It's going to have to happen, right? I mean, no doubt in my mind. And I want you to let me know in the comments, guys, like, how many times have you had a conversation through the years where you said, man, I wish I would have bought Apple or Google at this price and this year, or Amazon or Facebook, you know, at this price or whatever. And what is the price now? Like, where do you feel comfortable going into these stocks and starting to dollar cost average in? Like, how low do they have to go for you? That's really the question. Or are they there yet? Right? I mean, that's what you got to think about, because things can always get worse, right? I mean, sure, 2023 probably be a hot mess, but, you know, at some point in time, when do you pull the trigger on these stocks? So let us know down in the comments. And for me, I'll be honest with you, I get happy as hell when I see these kind of drops. I get so happy. I don't know why people get upset about it. Well, I mean, if you own the stock, you probably aren't happy. But, you know, I just look at it and go, this is great. I mean, we can sit there and buy in at what price and start DCing in when you want to. I mean, come on. You know, nobody thought for a while you see these kind of stocks go at these prices and getting decimated. But, you know, the good thing is, or not necessarily a good thing, but the one thing you got to remember, and I did this video back in April for a reason, was what one of the greatest investors, you know, ever said, and it was this right here.
Excuse me. Is a lot of times people buy on the basis the stock has gone down this much. You know, how much further can it go down? I remember when Polaroid went from 130 to 100. People said, "Here's this great company, great record." If it ever gets below 100. You know, just buy every share, you know, and it did get below 100. A lot of people bought on that basis saying, look, it's gone from 135 to 100. It's now 95. What a buy. Within a year, it was 18. And this is a company with no debt. I mean, this is a company that was just so overpriced. It went down.
And so remember that, because remember when people, you know, had all those YouTubers who have no idea what the hell they're doing and only had a 2020, 2021 type mentality that stocks only go up, telling you to buy every dip, you know, all the way down here, and you ran out of money. That's what he's talking about. Like, everybody just keeps saying, well, they can't go that much farther down. They can't go that much farther down, right? But they can, you know. And so that's the thing I want you to think about. But think about, more importantly, what the institutions are going to do. Are they going to be buying at these prices? Are they going to be selling at these prices? That's what you got to really think about. That's the big money. Where are they going to start pushing these stocks up? Make sure you look at Netflix's chart, right, before you answer that question. But here's the good thing is, you got Pinterest, you know, reporting earnings. I mean, they beat expectations top and bottom line. Active users, not really nothing to report there. But the stock last time I looked, it's up like 18%, right? It was moving good before Google and all the rest of the ad stocks reported. And then you got Intel. This usually gets decimated, but, you know, hey, guess what? The bar is low. So they actually beat top and bottom line, if I'm not mistaken. And, you know, the stock's actually up, last time I looked, around 5% or something, which ain't much for that stock, but it's still up. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And so, of course, now we got to get into, you know, there was big economic news come out, big things that happen around the world today, right? And so, you know, look, all the central banks have been pivoting, but you know what? The ECB said, we're raising 75 basis points, and we're going to go ahead and not make the banks very happy, because they're going to go ahead and change the terms and conditions of their targeting long-term refinancing operations. And so the banks won't be too happy about that. And then, of course, we had GDP. There it is. Came in hotter than expected, better than expected, I should say. And boom, we're acting the positive, right? We were negative, and popped up in the positive. And so the one thing you got to take into consideration with this one is that there was data in this report that showed that inflation is actually cooling, especially core, which is what the Fed actually likes to look at, with some metrics in there, at least the report I read. And so that leads us into November 2nd, right, when the Fed meets. And understand that could be one thing they use to justify putting pivoting language in what they're going to say. And I come up with that term, pivoting language. I'm getting that from BlackRock because the report hit today. Remember, they own more assets than anybody right now. It was $9 trillion, now it's about $7.5 trillion because it's beat down the market. But they're advising fund managers that there's going to be pivoting language on November 2nd of what the Fed says, right? They expect them to do a 75 basis point hike and then start doing pivoting language, like maybe they're not going to do a 50 in December or something like that, or whatever the language is supposed to look like. And, here's the market, and sort of they can use this as cover. Plus, how many central banks around the world now have you seen blink? And why? Because they're starting to see things break. Right, you got central banks coming in buying bonds. You got central banks not raising as fast as they were supposed to. They went, wait a minute, hold on a second, right? And so, just saying, be open-minded to it. That to me is I guess the most important day at this point in time, because we're past all these big earnings, right? And have you not noticed how well the markets have held up? We've had 2 to 3% drops on these indexes, and look what happened today. Look what happened this week. At one point in time, I actually recorded this. I didn't put it in here, but at one point in time, Meta's down 24%, Microsoft's down 6%, Google is down 5%, Apple's down about 4%, and there was another one, I can't even think of it now, but it's down 3 or 4%. And the SPY, S&P, was down literally only I think it was 0.25%, a quarter percent, and then the Qs were down 0.88%. It wasn't even a full percent. It was crazy. And it kind of just steadily just stayed in this little bitty range all day. And you've seen this with these mega caps who are weighted heavily in those indexes getting pummeled, and the markets are holding up. Why? And the VIX is going down. People are selling it, right? Isn't that kind of funny? That's been happening. You would think it'd be the total opposite. But no, they're not. And what does that mean? That means big money is sitting there going, you know what? They're waiting November 2nd, and maybe they know something. That's all I'm saying. So be data driven, be open minded about it, because I'm telling you, it's amazing how these indexes have held up. The Dow's actually up. The Dow's been going up the last few days. The Russell 2000 been going up the last few days. Right? Small caps, risk assets up. Right? And so that's something to keep in mind. And I'll tell you right now, I'm a visual person, and if you think it's been bad so far, guys, look, this is how bad it can get. This is the S&P 500 number of days without reaching the prior high. This is 1970s when they had high inflation, almost 1,900 days. The dot-com bubble, 1,800 days before reaching the high again. 08, what is that, 1,400 days. Look at this little blip right here. 2014-15, we went down 15% total. Wasn't even a bear market. And then look at this over here. That's where we're at now. 200 days. Really? And everybody's stressing? That's how bad it can get, right? If that happens, this is a bear market that just carries out, and it feels bad because we've gone down really fast, right? Because what happened? Fund managers are telling you now, the big boys, the big money, say, oh, we got ahead of ourselves, right? We got ahead of ourselves. But again, here's the generals. They're getting taken out back and shot. People expected that in the second quarter. Now it's happening in third quarter, and the indexes are holding up, which is crazy, right? Because economic data, GDP, whatever it is, it's still bad. Everything's still slowing, but just not as fast as they thought it would, And so, and I'm actually I was working on it today, a video for the members talking about what happens when the 3-month 10-year and the 2-year 10-year are both inverted at the same time, because it is not what people think. And they'll get to see that. I get to show them. And so I've kind of talked about that probably maybe a year ago. I was talking about that. But again, if you want to join up with that, I think we got 12 spots left open. Less than a McDonald's combo. Sign up for it, then I'm gonna lock it up for a couple weeks. And so anyway, hope you got something out of it. Hit the like, subscribe button. Don't forget hit me up in the comments on what you would do on these stocks, what your price is, and what do you think is going to happen November 2nd. Do you think they're gonna go ahead and put pivoting language as BlackRock says, or just stay hardcore and say the heck with that? We're not going to do that. So just let me know in the comments, and I'll see you guys tomorrow.